By far one of the most versatile and far-reaching applications of blockchain. So we've got a great panel here for you to talk about how this new tool is changing the market, how institutions and sectors are using this technology and taking notice. So we have our panel here today. We'll fill it out shortly, but Andre Portilho, Associate Partner and Head of Volatility Desk at Banco BTG Pactual. You're based in Brazil. And Roger Darin, Head of Crypto Assets and Head of Blockchain Advisory for inacta AG. And Pascal Gauthier, CEO of Ledger. And you're based in Paris.
Correct.
So welcome to all of you. I have to start with a very important question. Why tokenization? What can tokenization do that cannot be done on my Excel spreadsheet on my phone or on my computer? Make your case.
Okay, so it's me. Okay, thank you. So hi, everyone. So I take that first question, which is, it's a difficult one because there's not one answer, there are many answers. However, I'm Pascal Gauthier, I'm CEO at Ledger. At Ledger, we deal with security. We're known for the Ledger Nano, Nano S, Nano X. If you can raise your hand if you have one of our products. Okay, thank you very much for those that raised the hands. For the others, ledger.com. You can buy one online. But we also do security for enterprises with Ledger Vault, and we do security for IoT with another business division that we have that's called Ledger Origin. So in order to answer your question, I'm not going to do a big thesis on the coins and tokenization. Just give you one example of what we do with Ledger Origin and tokenization of energy. I think it's always better with an example.
Agreed.
So we were approached by a company called Engie, which is a utility company in France. They're #1 producer of energy in France. And they have a problem because they have a lot of green energy and people want to buy green energy today, except that at the time, it was actually not on their computer, with the example that you've used, but it was actually via fax that they would receive the information of how much green energy was produced that day. And so they had to aggregate the faxes in order to know how much energy was produced and how to trade the energy, etc. So the fax system is very inefficient. And by the way, if it's on your computer, it's only with you, and so you don't really share the information with anyone. So what we've done with NG was to put Ledger technology on windmills. So sort of security boxes on windmills. So calculation of energy produced that day and transmission into a blockchain and tokenization of that information into a blockchain is all done with the security of Ledger. And so what do? We bridge the gap between the physical world and the digital world. And why is it cool? Well, first of all, because it's cool. And second of all, because suddenly you have a green token, so it's not a fax anymore. Suddenly you're certain that actually that number of megawatt was produced that day by that windmill. And then it goes into a blockchain, and voila, you can actually trade the token. So it's actually a very elegant way to go not only from the physical world to the digital world, but it's also a great way to tokenize energy and so therefore trade energy. So that's one example of why tokenization is cool, why we believe actually whatever has value needs to transit with a blockchain. It's actually better than the financial system that we have today. We think it will go even sort of faster in the future. We'll scale in the future, but blockchains are really good to transact and to transfer value from one to another.
Roger.
I like the point of giving an example, and let me do that as well. But before I do that, let me give you some context on where I'm coming from so you understand the example a bit better. Before I joined this amazing world of crypto, I was in investment banking. And investment banking is a great thing. It makes markets more efficient, allows people to transact and take on all kind of risks. However, it's made for really, really big corporations. It's made for wealthy individuals, it's made for corporates, it's made for banks. If you have a large balance sheet, then that is where you're at home. But for smaller people, it's actually very difficult to get into this. So for instance, let's take private equity. Private equity is is a lucrative market. You need to do your due diligence, but once you've done that, there are good returns, especially when you compare it to some of the forms of investment that are available to, let's say, regular people. Now, with tokenization, this changes. For instance, there's this project that I'm involved in. It's called Finca. This is a cattle ranch in Bolivia, has about 4,000 cattle, and I didn't know this when I got involved, but a cow eats so much grass that every day it puts on roughly 1 pound of meat. So when you have 4,000 cattle, that's like 2 metric tons of meat every day. That's a boring, but a very steady kind of revenue that you can expect. Now, for me as a private investor, that is beyond my reach. I can't go out and buy a farm. If a bank bought this for me and put it in a fund, well, the sort of investment that I have, a few thousand francs, chances are that running this position in my portfolio, the bank is going to charge me like 50 francs. I don't know what the charges are elsewhere, but here in Switzerland, this is what I have to expect for every line item in my portfolio. Now, the return needs to be outrageous to just cover those expenses. It's just not going to work. Now, in this case here, I can buy the token, I can put them into my wallet, keep it in there for free of charge, and I have an exposure that I could not have had I been dependent on the traditional financial system. And that is why I think we do need tokenization.
Adding to what they already said, for me, the two things that combine together. The first that, let's say, I work for a bank, an investment bank. So every client that wants to buy some of our products, they have to download my app, and then they will interact to the products that we offer, okay? When you tokenize something, and when someday we have a more common language, I would possibly be able to offer my products to any other people who will interact with these, let's say, protocol. So the analogy is like the internet for information would be these technology for value, for money. You can go beyond that for also for a registry and so on. And with that, you can offer, like you said, good investments and good products for a much broader audience and, why not, globally. So the last year we issued a security token which represents a portfolio of real estate in Brazil. Okay, so the minimum to invest in this token was $500. So we have people from Europe invest in a real estate portfolio in Brazil through a blockchain token with $500. So as far as I know, there's any other instrument in the financial world right now that allows we have this type of reach and democratization. We can talk long about all the efficiencies, but for me, this is the main reasons.
That being said, why are we not seeing more tokenization in traditional financial markets? We've seen a lot of tokenization in other types of assets, but why not in the financial markets specifically?
So, I mean, first of all, there is tokenization of everything. So I think that under tokenization, it's like the new blockchain. So you can put sort of anything that you want. You could argue that tokenization of the US dollar is tokenization. You can argue that Libra is a form of tokenization. And so if you look at it from that angle, then certainly there are things that have a lot of value. So all money in the world is close to 90 trillion. And so I think the problem, the two things. One, the technology is very young, so we talk a lot about the young technology, but it is still not at scale because probably some of these projects, if not all in the future, will use public blockchains. However, public blockchains are not ready to take on the load of billions of users tomorrow. And so there is that. But also, if you think about Bitcoin, Bitcoin is actually quite cool because it's a bottom-up approach where you have 2 people doing Bitcoin, then you have 3, and then you have 10, and scalability comes with time. With this tokenization of everything, you have a top-down approach where suddenly you could technically reach billions of users right away. And so how do you deal with scalability if you have to design something that reaches billions of users right away? And so I think what we're seeing now is a play for, it's slow, it looks slow because number one, there is a play for infrastructure. I read today something that someone I think it's a Winklevoss brother who said, the future is only software. Actually, I respectfully disagree. I think a lot of the future will be hardware because you need to secure the endpoint. If you want to make a transaction, you need to have something in your hand. So whether it's a phone or something or a pair of glasses, like you need some hardware to sign a transaction in the future. So just for that use case, you sort of need endpoint security. And so if you think like that, infrastructure is very key. If you think about the internet, if you think the early days of the internet, what makes the internet possible today is just a massive scale up of the infrastructure, hardware and software that goes behind it. So, before we have a few years before we get there, and there is a massive investment that needs to come in the infrastructure first before you can actually have applications. So that's why I think it's slow now.
I just wanted to introduce Joel Dietz from TokenSoft. Unfortunately,
yeah, Mesa is still on his way. I was involved with the founding of TokenSoft back when it was an early Ethereum project. I was one of the Ethereum sort of founding team myself. And it's been just great to see the development of core infrastructure around launching tokens from the very beginning, of which TokenSoft has been clearly one of the leading providers of that, looking at basically everything you need to do with smart contracts, particularly looking at EVM, which has become a sort of standard for the industry at this point.
Andre, would you say, and Darin, would you say that, would you consider the pace of tokenization over the last few years truly a success, or has it been a disappointment?
It's very hard to say if it's moving fast or slow for me. We are kind of anxious, but I think there's some things that it's slow in the pace, and we learn a lot when we issued our token last year. Is that the technology, although it's good for us to issue, it's still a layer of complexity for the end user. Okay, right now it's very difficult to people, to non-educated people, to invest in a token, a security token. Okay, you gotta understand what is a digital wallet. You gotta understand what is. You gotta buy a cryptocurrency to join most of the offerings. So I think we still need to work a lot in products, services, and also business models that will make this technology layer disappear. We talk about a lot of technology and so on, but actually technology should be invisible. Otherwise, we will never get mass adoption. And for me, we need to build better solution that people already have, because why switch, right? Cheaper, more efficient, and in the end, if something goes wrong, who you complain with? Or in the end, who you sue if something goes wrong? Most of the things we are talking here, we're talking about money, okay? So, okay, if you will, using your Spotify, and then you listen to your Rolling Stones playlist and something goes wrong, you won't die for it, okay? You do a bad review, you switch to another streaming app, and then you're good to go. But if something bad happens on something that you are investing your money, then the bar is way higher. Okay, so the industry still needs to work, in my opinion, in solutions that we provide that kind of.
But by the way, it goes super fast. I mean, you do the same panel 2 years ago, you have 2 people in the room. Huh? So it goes fast.
2 years ago, we're probably going to have more. 1 year ago, probably 2 people, right?
Exactly.
I just want to introduce Guido Buehler, who's the CEO of SEBA Bank, and Mason Borda, who's the CEO of TokenSoft. Thank you for joining us and fighting traffic to join us Thank you. Thank you.
I apologize for the delay, but we were a bit in democratization process involved in the demonstration, so it's also in the spirit of blockchain, right?
And Guido, while I have you, SEBA achieved a significant milestone this past fall. Congratulations. So for the first time, the Swiss regulator FINMA granted a banking license to a financial services provider focused on digital assets. First of all, why was a banking license so important to you, and what were the biggest hurdles?
Yes. Why SEBA? Why a bank? And the thought occurred to me because there was a realization at one point when I saw there are 4 attributes on the blockchain that really redefines finance. With those 4 attributes, you can do everything that we have been doing so far in financing. And these 4 attributes are the following. The first one is the digitalization of assets, and that's what you just have been talking about. And you could say the crypto is a sort of an experiment. And it's about a $200 billion market, and it's dominated by Bitcoin. I'm a big fan of Bitcoin, but that was not driving the case. There are now many studies that indicate over the next 5 years, this is going to be a $20 trillion market. So this is the basis why we went for this venture. The second attribute is on blockchain, you have the most efficient transfer of ownership. In a millisecond, you transfer, irrevocable, it's done. And if you think about this, particularly in the context of a sharing economy, where social capital is more important than financial capital, this feature is very important. When you think about the traditional banks, it is also very effective because all the post-trade activities are no longer required. So basically, the clearing houses, the settlement houses, the CSDs, this technology is basically the first nail in the coffin, so to speak. Is that the right English expression? Yeah. Maybe it's not so nice. The third, if you take these 2 things together, so you have an asset digitalized, and you can move something in a millisecond, 4 milliseconds, you have the private key. And the private key is the perfect collateral for financing. So on the, we talked about asset side most of the time, but the liability side is covered. And the fourth element is the tokenization in itself, which is the origination in that regard. And that's why with that realization we said we don't want to go like a fintech bottom up. Since with these 4 attributes you can redefine finance, we want to go the king's way. And we aimed for the best banking license that exists, and this is basically the universal banking license, where we can do asset side, liability side, primary market, secondary market, from institutional down to private individuals, and that's what we aimed for. And we got it, and we are very proud of it.
Very proud. Congrats. Hi, Mason.
Hi, how are you?
I'm good. One of your subsidiaries just got approval from the SEC, right, to be a registered transfer agent. Is that correct?
Yeah, that's right.
And you've said this is the latest move to build, quote, an automated investment bank. Can you explain that?
Yeah. So a lot of the back office procedures in investment banking are still largely manual. Just for a share of a company to transfer in the private market is still largely manual. When these entities and individuals get onboarded through investor onboarding procedures, still largely manual. Entity onboarding can still take anywhere from 3 to 4 weeks plus. And so what TokenSoft is really about and what the subsidiary helps us to do is to automate a lot of these procedures that exist. And instead of manually reviewing things to see if they are authorized transfers, instead we use the blockchain to bake in the rules for when a transfer is compliant, non-compliant. Now assets can move freely, and if they're not authorized, then they can fail. And so the transfer agent is a tool that helps us to sort of get there.
Roger, how are traditional institutions responding to the notion of tokenization? Are there any good examples out there?
Well, one example is sitting next to us, right? BTG Pactual. I mean, I was shocked is sort of the wrong word, but it's still the right word. Let's say surprised that someone of that caliber came into the market, and then there's a very specific project. I thought it was great news, and I was very happy when you guys came in. And I think this is also what is needed. Earlier you asked about the speed at which this is all happening. The traditional financial system has a system that works quite well and is established. And to change this is a much slower process than a technology-driven process. Of course, we're all in this blockchain thing, and we see how fast things are moving, and we would like to have the traditional world move a lot faster, but it doesn't. And to your question, what institutions are in, there seems to be a reverse correlation between the size of an institution and its ability to move fast. In Switzerland, we have seen some banks get into this space real quick, but these tend to be smaller private banks, very often privately owned. One CEO of such a bank told me last week that his shareholder family, the family that owns the entire bank, they're not asking him, he's not asking them to maybe move into this new market. The shareholders are asking him to push forward into this because they see a potential, they're demanding it. This is very much the contrary of what we see in large institutions. Today, UBS reported revenues, for instance. A bank like this will find it incredibly difficult to move into this uncharted space. It's just not what large institutions generally do. Skype wasn't invented at a telecom company, right? We all know the Kodak example. Kodak was the first one to have digitized camera, yet they totally screwed it up. Didn't do anything. I think if you're smaller, you're more nimble. Maybe you're closer to the market, hence you move fast. And
this is a very global audience right here, but mostly international, US-based. What are the biggest differences you're seeing on the domestic side versus the international side in terms of tokenization?
I think the one thing that stands out to me the most is the regulatory side of things. So in the US, the SEC moved a little bit slower in terms of providing guidance. And there were also a lot of investigations going on into the ICOs and the unregulated sort of space. And that made the space as a whole a little bit more cautious. And it sort of slowed innovation a little bit. There were less companies that were starting to launch in the US. They started going offshore. And in places like here in Switzerland, we did see guidance come from FINMA earlier on how they saw the space and what was a security token, what wasn't, how it should be treated. And that does give greater comfort to entrepreneurs when looking to launch a company. So we have seen regulators around the world outside of the US be a little bit more aggressive with trying to provide guidance and trying to attract companies.
What was your experience, Guido?
Well, yeah, very good. I think the difference between the US-based laws and maybe the Swiss laws is the Swiss laws are principle-based, right? So as long as you are acting in the spirit of the word, there is flexibility. And the second, the system in Switzerland is bottom-up rather top-down. So for instance, we are very proud that we have moved into the building, which was a historical building, where also the first crypto currency was ever accepted by a government. And that was about 2.5 years ago, and there was no regulation or what have you. So at that time, the city of Zug, the crypto valley city, that's why the whole thing emerged, thought, well, that's an interesting concept. They brought in some young students. There was just a sort of a white paper and said, well, that could be a revolution, let's have a go with it. And I think in other jurisdictions, you cannot do it unless it's clearly described and allowed, and that's maybe the difference.
I would like to build on this principle-based approach that Guido just mentioned. It also means giving power to the people on the front. It's not in many European countries, you have this very centralized approach where the guy you speak to has no power to make any decisions. In Switzerland, that is very different. You have people, usually where you live roughly, that you can talk to, and they can make binding decisions, say a tax ruling, which is very helpful, again, if you go into this uncharted territory of crypto assets.
Yeah, I mean, we at Ledger, we feel privileged sometimes because we are taking our business on the three main business continents today for crypto, which is sort of Europe, the US, and APAC, and we have clients, B2B clients in all three regions. And so, because we do that, basic security layer technology, I mean, difficult but basic, much needed. Like we see what projects are kicking and like who's doing what. And if I want to be provocative, the more regulators come down hard on Bitcoin, the more you have STOs and blockchain, and the more Bitcoin is okay, the more people actually do Bitcoin. I'm not saying that people do STOs and tokenization because they cannot do Bitcoin. Like there are legitimate reasons why you would want to do this. But it's interesting that if the regulators say that Bitcoin is a big no-no, then everyone goes onto blockchain. I mean, the latest example is China to say, okay, Bitcoin not so good, but blockchain, yeah. And so The question now is, if all of this goes on a public blockchain, like, is there such a big difference in the end, and how the regulator is going to face this, because there are technicalities in, what is a security versus commodity, etc. But in the end, people are trading, and so what we see, Wall Street trades, and actually big financial institutions are doing big things on Bitcoin, and they're trading a lot. We're talking about ICME, I mean, you name it. Everyone is entering into the game. And they're entering the game with Bitcoin. And so that's interesting because the US, I think, has a very strong angle. It doesn't mean that people don't do tokenization in the US or security tokens, because they do, but Bitcoin is very strong in the US. In Europe, we don't really know. And I would say that Asia, depending on the country, is very either heavy on Bitcoin trading and or looking at security tokens. If you take like Hong Kong or Singapore, I think similarly to Switzerland, the rules are clear around securities, and so therefore, whatever is a security token apply to the same security rules, and so it's game on. You can actually be in business pretty easily. Yeah, so from our perspective, this is what we see.
Andre, what's the legal uncertainty surrounding tokenized assets?
Well, I think at least in Brazil, it's not exactly uncertainty, because people pretty much know what is a security, what is not a security, okay? But most of our regulations were made for analog world, so it's hard to fit the tokenization process into the current regulation. When I talk to the regulators in Brazil, which by the way right now they have a very good mindset regarding the field, is that okay, I don't want to ask for specific permissions on the actual regulations that we have today, because this was like, well, trying to fit a circle into a square, right? We need new regulations, and for that, at least in Brazil, not only the central bank but also the Security Commission, they are starting to adopt a sandbox framework, which I think for these type of technology is the best way to move, because how put yourself on the place of regulators. How would you regulate something that actually is not there, and you don't have a clue how the technology will evolve? So, okay, man, give me some boundaries, let me play around, okay, and we'll figure out together the market and the regulators of what the regulation should be, okay, but do that. Don't just say no, okay? So I'm more on the optimistic side in this discussion.
Yeah, I just wanted to fall into that. So we started TokenSoft in 2017. It was right when there was starting to be regulatory clarity around securities on the blockchain. And our role was really to map the blockchain into the securities regulations. And so our perspective was the regulations aren't going to change. We're not going to be able to bend the rules or anything like that. So why don't we make the blockchain fit into the existing regulations? When we started, we also operated internationally. So we helped automate during the primary issuance process the securities regulations in over 50 countries. That was through the private placement rules. And so we used existing rules plugged into those. And for the token, I think that was the big challenge is if you look at the space, all these tokens and assets on the blockchain really moved freely at the time up until 2017. So on Ethereum, we made something called ERC 1404. So you can place, and enables you to place restrictions on the token. So you can separate trading of a token in one country from another country and prevent transfers across borders. You can prevent things like if you only need a certain type of investor that goes through certain procedures to hold the token, you can do things like that. And I think the big challenge was explaining to regulators that this is possible. So 2 weeks ago, we gave a presentation in the SEC to show them that this level of control was possible on top of the blockchain. And in looking at the presentation, I realized it was the same exact presentation I gave to them 2 years ago. And and so there's a lot of challenges like that. I think the regulators are still getting comfortable, and it takes a little bit of time and education to get there.
And just to add, we need to think, we have to have some empathy with the regulators as well, okay? They have a job to do. So, and related regarding securities, most of the time they are worried about, okay, what type of security should you give to the end user in things regarding like a market manipulation and so on. So once you start to understand that, the work is okay to show them that we have solutions that can address these problems, and most of the times in a much better way than the instruments that we have right now. Okay, when you show how can you do your KYC and your compliance using a smart contract, it's way better than we have today. Okay, as if you take like a traditional financial instrument. So I think the regulators, at least in Brazil, are quite open. Okay, of course, it will never happen at the speed that we want, but I mean, it is what it is.
Yeah, but I don't think it's bad to challenge regulators every now and then a bit, to push the boundaries a little bit. I mean, take the US, right? Some years ago, crowdfunding was totally illegal. It was against the law to do this. Now, some people went ahead, did it anyway, and the regulator saw there's a problem, and he had two choices. One is put all these people in jail, or be reasonable about it and have a conversation. In a way, it makes me sad that the SEC looks at the presentation again after 2 years and hasn't moved in between. I mean, the security laws we have in the States are like from over 100 years ago, when people had no internet. And the SEC slowly acknowledges this. When you look at the accredited investor, when that law went into effect, about 1% of all Americans could call them or make themselves an accredited investors. Today, the rules have been broadened. It's about 8 to 9% now, and they think about maybe expanding it even further, that it's not just your wallet that is a proxy to say whether you're a sophisticated person or not, but that you can, for instance, take a test and prove that you're a sophisticated investor. Because at the end of the day, the purpose of regulation is to protect investors. But protection is not just from risk, it's also from opportunities.
And speaking of protection, Pascal, you're one of the OGs in this area. What are the biggest challenges of securing tokenized assets?
Well, there is security, and there is security at scale, because the problem with security is if you have $1 to steal, it's not very interesting. No one is going to, wake up in the morning to do that. But if you have $1 trillion, $100 trillion, etc., then it becomes very interesting, and the cost of the attack can be very high. If I know I can steal $1 trillion, maybe I'm going to spend $100 million to do it. And with $100 million, I can do many things. I can hire many people. I can, build a lot of technology, et cetera, et cetera. And so, security, that's what we do, security of the private keys. I think security tokens, if they're built on whatever the blockchain is, actually, public or private, you need security of the private keys. It needs to be easy to use. It needs to flow. You don't want to build a system that works not as well as the former system. So it has to work sort of faster, better, et cetera, if you think about the future. And we don't think the industry is here today. I think the industry needs to evolve into sort of better technology to secure, manage private keys and build the governance on top of private keys. So I think these are very important things. But then the scalability of it, in a sense that, again, if even me as a CEO, like if I need to protect $200 billion, which we have today, I think we have cool technology. If I need to protect $200 trillion tomorrow, we need to work. So there are many things that need still to be done in a company like Ledger, but in any other company, because again, the cost of the attack rises with the value that you're trying to protect, and there is a big incentive to hack anyone that has value, and the proof is in the pudding. I mean, if you look at who gets hacked today, the exchanges. Why? Because they are the custodian of your coins, and so this is where the value is. As soon as you transfer that value onto someone else, or because someone else suddenly has more value than exchanges, attackers will switch from Binance to whoever is a new guy in town with the more coins. And security tokens can be hacked, so people will say, yeah, but it's okay because it will be in a private blockchain, and actually we can roll back the blockchain. I mean, there's potentially things that you can do, be that as it may. I mean, maybe the security is not that you lose the value in the end, because there are things that you can do. but you don't want your blockchain to be hacked. You don't want to roll it back because it's a serious security breach. No one wants to have that. So the email that you get sometimes, say JP Morgan got hacked like 200,000 email addresses. That's not very cool, but it's only email addresses. If you get the same email to say, oh, the blockchain got hacked and everything now is somewhere and we have to roll it back and it's going to be a clusterfuck, then you don't want that email.
Guido, is...
Can I add?
Oh, no, I was just going to ask, is that the first question your customers ask about security?
That's the whole value proposition of being a bank. I mean, when we started at the business case, at that time it was all about DeFi, you know. I mean, why do be your own bank? You don't need to have a bank anymore. But now I think everybody accepts that at the end of the day it's about the protection of the private key. And to Pascal's point, that, you know, if you have big wealth, you want to assign the responsibility to someone, and if you do that, you want to assign that with the place where you create the greatest confidence, controls, is a fantastic oversight, and at the end of the day, that is a bank, right? Another thought, and I know Pascal and I, we had a very interesting conversation in St. Moritz.
St. Moritz,
right?
yeah, we stay in the Alps in January.
But the point is, if you want to make digital super safe, it becomes physical, and let's leave it at that, right? And that's why we have, you know, you have the various degrees of security, and I think, you know, the hotter you are, or more online you are, there are significant features, and companies like Ledger that evolve in that direction.
And that's how actually banks already solve that problem, right? With the digital. You turn it physical, and then you have the solution there. Yeah. And one thing, and one thing to point out is that, like I said in the beginning, I completely understand the not your key, not your money thesis, okay? But for mass adoption, it's hard for me to see that this is the solution, because people don't remember their Apple ID, so why they should put all their money into something, yeah. And then we definitely need better custody service, okay? More institutional, and probably with more big pockets behind it. Because at the end, if you are holding a lot of money and some things go wrong, you're gonna sue somebody, right? So to have mass adoption, institution, and big players coming into the field, again, this is not a technology problem. This is a relationship problem, right? It's a business problem.
All right.
You can disagree, Pascal. Go
guys,
on.
this is clearly provocation. So let me, and plus we're here to disagree and put on a show. So let me do that for everyone. I disagree strongly, respectfully disagree. I don't disagree on everything, but I think the one thing, you know, sometimes when we're in these panels, I don't like it so much because we always say, you know, we talk about regulators all the time and we ask for permission, etc. Bon, real big innovations usually don't come with regulation. People will say, oh, but it's finance, so finance is different, and finance is heavily regulated, where the internet was not so much, and so every application that was built on the internet grew without regulation. This is why they grew so big and so fast, but it was the internet, it was largely unregulated. I can make the case, first of all, the whole point of Bitcoin is about financial freedom, and financial freedom, you own your private keys. If the whole point of Bitcoin and blockchain is to, you know, deposit it at the bank, bon, I don't see the big innovation. I don't see why we do all this. There are many other ways of doing this. So, and plus, Guido, I'm disagreeing on purpose.
I agree with that.
If I want to be the devil's advocate, I would say, why are we recreating a system that we're trying to get away from, etc. There are good reasons why, because in the end, it's ultimately the customer's choice. And I agree that if you have $1 billion on your balance sheet, maybe you won't trust someone with it because you're like, poof, out of my hands. Maybe you want insurance, you want a bank, you want people to take care of that for you. That's called wealth management, and that's all good and well. But fundamentally, Bitcoin gives you something they didn't have before, which is financial freedom at the individual level. And so therefore, that's going to be, you know, Bitcoin and blockchain will build use cases that no one will be able to control. And the good example is, where is a coin? So typically, if I take 1 Bitcoin, I share the private key among 3 people in the room. Suddenly, no one has ownership. And we all have to meet in order to, you know, spend that Bitcoin. But therefore, it's very different for a gold bar, where the gold bar is easy. Either have it or you have it. But like, it's not in the middle. You know, Bitcoin can be in the middle. Cryptocurrency can be in the middle. So you can perfectly see how decentralized finance can exist, how many of the services that has been built originally as centralized services on blockchain, like exchanges, for example. It's a necessary evil when you start, but in the future, there are many value propositions that are being developed that are fully decentralized, where you manage your own keys. And by the way, thanks to Ledger, you can manage them with security, ease of use, blah, 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 blah. So I'm not here to pitch my company, but this is also what we believe in. So we do actually believe in the two worlds because we believe that users need to have a choice. And full decentralization will work for a lot of people, won't work for some. There is this poor guy who, software forgot his key the other day. I don't know if you saw that tweet. What's his name?
Peter Schiff.
Yeah, that was just a crazy tweet. But anyway, so for this guy, centralization, and for others, maybe decentralization.
We have an agreement. Yeah.
We agree?
In terms of, I'm just going to wrap this up. In terms of mass adoption, scalability, where do you see that in the next 5 years? Does it happen in the next 5 years, next 10 years? I mean, there's a lot of innovation happening, but when does it get to the masses?
Yeah, I think so. All the security token stuff was sort of poked through in 2017, and it started to become a thing in 2018. And the thing about the world of, I think if you look at the world of cryptocurrencies, you have wallets and exchanges, and exchange can essentially do everything today. If you look at the world of securities, there's perhaps 10 different entities that have to interact to provide the end-to-end service to the client. And we've only started to build just a few of those pieces so far. And I personally still see this space in terms of mass adoption about 4 or 5 years out. I think there's still several different layers that we have to build out to make the space scale, to make it easy to use, and to make it look normal, just like the world of securities does today. And that's just going to take a little bit of time. Everyone, I think in the space still thinks it's just primary issuance and then secondary markets, but it's a lot more complicated than that. And so that's what our transfer agent is about. It's about providing one of those pieces of the puzzle so that we can help our clients do registered offerings. We have 2 clients doing SEC registered offerings. And clearing and settlement largely hasn't been figured out. And that's another piece that's going to have to come online as exchanges around the world start to interoperate. And there's going to be a few more pieces that we're going to find out that are necessary before we can get there. But I look at it at 5 years out from now.
Small provocation to Pascal. When people don't need to care anymore about private key, then we have mass adoption.
Okay. But is your question a way to ask us for price prediction? Because it was a great way to ask for it. 2021. Boom. Voilà.
Boom.
Yeah. Well, I don't think. I think
What day, Pascal? Sorry. What day?
June. 26 for my birthday. 26th of June, 2021. There you go.
We have a date.
We have a date. No, but seriously, I think I was in the year 2000. I started my career on the internet, and interestingly, when you watched how the internet developed, it was with e-commerce. And at the time, people were saying, "Oh no, but the big media companies will come and they will buy advertising, etc." Actually, they didn't in the early days. It was because Amazon was making money selling stuff online that they could buy ads on Google, and this is how the industry got to market, actually. And interesting enough, when you looked at, and I was in advertising before, but when you looked at advertising revenue online, it was primarily direct marketing, which was very different from the way that you would split that. If you look at traditional media, there was more display. And direct marketing was I click, I buy. And so, interestingly enough, e-commerce sort of fueled the internet, and because e-commerce got off the ground, that's what fueled innovation. Maybe it's a simplistic way of looking at this, but the way that I'm looking at crypto in general is if you don't have something that fuels right now and that makes money, how do you invest? Because the problem is if you have a business that's going to be good in 5 years, it's massive investments, and plus, it's very hard. I speak to VCs every day. Go explain that, give me a lot of money right now, wait 5 years, and in 5 years we talk again. It's a difficult case to make, so you actually need to make money, and right now the way to make money is cryptocurrencies. I mean, if you look at who's making money in the space, you have BitMEX, you have Binance, and what do? They trade cryptocurrencies. So it doesn't mean that the other stuff doesn't work and that people shouldn't invest, but my point is what will drive innovation is a boost in Bitcoin and cryptocurrencies that will bring money in the space, money that will then be well spent to develop the next generation of technology, including security tokens and all those good things that we want. But what I said earlier is they need to be a massive investment in that game, because it's about serious stuff. It's about value. It's about protecting value. It's about building a value proposition that is competitive to the system that exists today. And the system that exists today is worth trillions of dollars on the stock market. And so how do you compete with that if you don't have a lot of money? So that's why my prediction is, Bitcoin go boom in 2021, and that will lead the rest of the innovation.
Actually, I think it's not the price of Bitcoin that will drive this, but efficiency. I mean, if I was a big company, you would have my interest the moment, or my attention, the moment you tell me that whatever you have here is going to be cheaper than what I have now. And this is what happened when you look at the transition from horse carriages to cars. In the beginning, cars were not competitive. We needed infrastructure first, we needed roads, because in the mud, cars got stuck. So we built roads, and we're building infrastructure in crypto now. The cars will get on it. They'll be probably the same speed roughly in the beginning than horses, and you still needed a mechanic on board, but it eventually happened, and this is what's going to happen with crypto as well. We're building now the infrastructure. We will at first be here with an offering that is roughly equal to what existing systems can do, but then, just as car leapfrogged horses, at some point, crypto will leapfrog the traditional financial system.
By the way, I agree violently with what you just said. I think I'm in violent agreement. My point is to say that in order to make the necessary investments in the blockchain technology that's going to be the underlying technology for everything that is tokenization, you need money now to make it perform better. Because right now, if you decided day one to move every bank asset onto the blockchain, it just doesn't work. Like, the blockchain won't support it. It's not fast enough. Like, it's just not possible.
I'm going to wrap it up here for me, but I will open it up to questions. We have 5 minutes left. Anyone have a question?
There is mic, or I can speak up. Okay. So I'm Valentin Preobrazhensky from Ola Token. We are the largest primary market for startups for their digital assets, utility tokens and security tokens. So our goal is to make a standard successful elevator pitch. It should end with a question from investor: what is your ticket, so he can buy it in the elevator, and also look again at founder and buy again, right? So, but in order to get to this point, there should be ecosystem which selects great startups, helps them to get tokenized it, and then get this token for initial exchange offering. What do you think, guys? What should we do to develop this ecosystem? What kind of partnership can bring thousands of non-blockchain startups into this space? So they have accelerators, maybe tokenization platforms, advisory firms, who funds them to get to this idea, to structure their token and partner with exchanges. What do you think, guys? What kind of partnership we should do?
We need to make everything look normal.
Yeah, but it should become normal. How? It should be a norm. How?
I think, we as a bank, we invest in a lot of fintechs, okay? But it's a good question because, and we run some scale-up programs down in Brazil. And when you asked that, I was thinking, there was not a lot of startups, at least in Brazil, involved in blockchain, apart from crypto exchange and so on, that was approaching us in that sense. So I'm going to think about that, how to bring those guys in, if there's some in Brazil.
With new technologies and new spaces, I think for the world of securities, this is a huge infrastructure change, and I think we don't really know what's valuable about the technology yet. There's no like killer app, and I don't think there's an answer right now, but I think just a lot of iteration and a lot of attempts are going to sort of bring to light what's actually valuable and how we can sort of leverage the technology in a new way. But I don't think we know what that is yet.
So I believe that logistics is already in there since you already have the bank in there. So what do you think when the big institutions and when the big money will come in, let's say from the brokerage perspective or insurance perspective, for the real, let's say securities like the MBSs, CDOs, and also because the real structured products can be done immediately on the blockchain and be transferred like within few seconds. So what is your opinion when the real money and the real institutions are coming in?
I think the time has arrived, but there is one critical component. This is the digital exchange in itself. We have a lot of crypto exchanges. I mean, 2019 was the year that was supposed to be the year of STOs, right? And STOs have happened, but they are sort of in a micro climate, right?
And alternative assets.
And alternative assets. But you know, if I take a GPLP structure and I tokenize it, so what? It doesn't, where is the business case? I mean, it makes the point that you can do it, but I don't see where there are any benefits if you do that. So I think if you look at the emerging market, I'm not saying emerging markets in the context of OECD, and we believe digital assets to be an emerging market, origination is only a function of successful distribution. And successful distribution is a function of marketplaces, right? And today we have exchanges, crypto exchanges. At the point where we have a proper digital exchange is where you can link the origination through the distribution to the markets. And I think at that particular point, the big money is going in. I mean, we have had fantastic conversation with various big companies. And just an example, supranationals, how much they buy, let's say as an argument, say they buy in Asia, right, in multiple countries, and they sell into the East, and they are a European company. So they have a big treasury department to project cash flows and manage, when they have the projection of the cash flow, they give it to a bank for a currency overlay. So you just create a global currency token which takes it away immediately, right? The costs are saved with the supranational. The small SMEs that supply to these supranational, the concept of currency management is a very abstract conversation. So you create immediately a benefit, and we don't have to wait for the digital exchanges. As an example. And otherwise, for digitalization on the buy side and the sell side, you have a lot of interest, but this missing piece is this digital exchange. And SEBA, we want to play an interim role, you know, with billboard matching or, how you say, not protected, like a private exchange. I forgot now the English word, but never mind. Until the digital exchange is going to arrive. That's my view.
Thank you very much, Guido, Andre, Roger, Pascal, Mason. Thank you very much for your time.
Thank you all.